Hello everyone, you are watching Saheb Academy. If you like our videos, then please subscribe to our channel and also hit the bell icon for the regular updates, and also follow us on Instagram, Saheb Academy. Now let's go to the video.
Hi everyone, in this video we are going to start this new chapter of company accounts, that is liquidation of companies. Now this chapter, liquidation of companies, it's a very simple and easy chapter. Believe me, it's very simple. Because here there is very little accounting. Mostly here it is format. Okay, this chapter is based on format because it is based on law, right? This process, liquidation process, it's based on law. So that is why here entire thing is mostly it is format based. Fine. So now let's start off this chapter. Let's understand what is liquidation of companies and why are we doing liquidation of companies. Okay, let's understand that. Let's start off this chapter. Now I have written the meaning over here. See here, it's very simple. Liquidation is the legal procedure by which the company comes to an end, right? Since the company is an artificial person created by law and ended by law. Simple as that, right? It's created by law, ended by law. That's it. So liquidation is nothing but just closing down the company, but there is a legal process for that. You can't just close down the company and say it's over. We are just closing down the company. It's finished, right? We can't continue anymore. You can't do that. You have to go through a legal procedure. How did you create the company? Yeah, promotion, incorporation and all that. Similarly here also you have to go through a legal procedure, a legal process through which your company will be liquidated. Okay, that is what is meant by liquidation. But we have to understand how did we come to a point where we want to liquidate the company, where we want to close down the company. See, first what will happen, for example, in case of any company, right? If any company is sick, it is not making profit, it is making losses, yeah, or it is it's unable to pay the debt and all that. So what will happen? First, the company will try to revive itself. Yeah, the company will try to revive itself by internal reconstruction or external reconstruction. Yeah, internal reconstruction such as reduction of share capital, alteration of share capital. There are lots of ways of doing internal reconstruction, right? Reviving the company internally, yeah, or externally. Externally means what? Amalgamation or holding company or subsidiary relationship, like that. So those are the ways the company will try to reconstruct itself. Because here in India, we don't believe in liquidation. We don't believe in liquidation. We believe that India believes that the company should continue on doing their business and there will be jobs created in the industry, yeah, and there will be many economic activities that will be generated because of the companies, yeah. So that is what India doesn't believe in chronic capitalism. We don't believe in liquidation. We believe in reconstruction of the companies, yeah. So that's the thing. So if any company is closing down, who do you think is the most suffered by closure of the company? Do you think it's promoters or shareholders? No. The most suffered are the employees and the creditors or the lenders. Okay, because in case of Kingfisher, yeah, Kingfisher, when Kingfisher was closed down, what happened? Vijay Mallya, he ran away, right? He ran away to the foreign country, isn't it? Now Nirav Modi also, he ran away. They ran away to the UK and they are living the best of their lives. They're in the foreign countries, isn't it? But who are suffering the most because of that? The employees, creditors, lenders, banks and all, yeah. So that's the thing. That is why here in India we don't believe in liquidation. If liquidation happens, what happens? See here, the employees and all, they will lose their jobs and there will be a problem in the job market. See, once the freshers are coming out of the colleges, right, into the job market, and if any company is being liquidated, then those employees of that company will also come in the job market and there will be so much surplus of employees in the job market. So that will be a problem, right? So that is why there will be a lot of problems when the liquidation happens. So that is why India doesn't believe in liquidation. It doesn't directly go for liquidation. It doesn't want any company to directly go for liquidation, and it doesn't happen like that. Here in India, we believe in, as I said, reconstruction. Yeah, reviving the companies. So we will first go for internal reconstruction and then external reconstruction, but there might be a point where there is no other option rather than to just close down the company. There is no other option. So as a last resort, the company will go for liquidation. Okay, liquidation, that is the closing down the company by the legal procedure, right? So that is what is liquidation. Okay, that is how we will come to liquidation. India doesn't believe in liquidation, but there might be a point where there is no hope for the company and it has to be liquidated. So that is what will happen, right? Yeah, so that is what is liquidation. So now let's discuss modes of winding up. Now let's see three different modes of winding up. But before that, you have to understand what is meant by winding up. See here, it's very simple. Winding up is not liquidation. It is not liquidation. Winding up, liquidation is a big process. Okay, it will take many years to do that. But winding up is just the beginning point of liquidation. Okay, it's the starting process of liquidation. Okay, the beginning point. And then the ending point is called dissolution. Okay, in legal terms, I'm talking about here that winding up is the beginning of liquidation and dissolution is the ending of liquidation. When the liquidation is completed, that is called dissolution. The company is dissolved, right? So there are three different modes of winding up, as you can see over here. Three boxes I've made over here. The first is inability to pay debts. If the company defaults, it cannot pay the debts, then it will be liquidated. Okay, and that would be called as compulsory winding up. It will be called as compulsory winding up. And then there is second is grounds other than inability to pay debts. See here, there are 5 grounds. See here, 5 circumstances in which the company will be wound up. And let me tell you that when there is compulsory winding up, in these two cases, compulsory winding up, then the winding up will be done by the tribunal. Okay, NCLT, National Company Law Tribunal, NCLT. Okay, it will be done by the tribunal. So grounds other than inability to pay debts, there are 5 circumstances here. See here, 5 circumstances where company is wound up by tribunal. The liquidation process will be started off if the company is in these 5 situations. See here, the first circumstance is company itself wants to be wound up by liquidated by the tribunal. Okay, the company itself wants it to be liquidated by the tribunal itself. They will pass a special resolution and they want it to be liquidated by tribunal. That's the first circumstance. The second is company is acting against interest of India. Okay, if the company is acting against India, such as against the sovereignty of India, security of the state, and meddling in the foreign affairs, if anything like that happens, then the tribunal can what? The tribunal can, wind up the company. And then the third is company has conducted fraudulent activities. Okay, or the company was formed just to do some fraud, then also the tribunal can, wound up that company. And then the fourth way is if the company fails in filing, if it defaults in filing financial statement with the registrar of companies, okay, or filing annual returns, filing what? Tax returns. Okay, annual returns for immediately preceding 5 consecutive years. Okay, not only 3-4 years, not like that, 5 years. Okay, consecutive 5 years. If the company fails to file financial statements with registrar of companies and file tax returns, okay, annual tax returns for 5 years, then also the tribunal can wound up that company. And the fifth reason is that winding up on just and equitable grounds in the opinion of tribunal. If tribunal thinks that this company should be wound up, even though it doesn't come into any of these categories, still tribunal can wound up any company. Okay, it can do that. So that is the 5th circumstance. Fine. So this is the grounds other than inability to pay debts. And the last is the voluntary winding up. If the company wants to close down the company, to shut down the company because the purpose of the company or the duration of the company has been, satisfied, it has been completed, okay, then what? Then they can voluntarily wound up the company by itself, right? So this is voluntary winding up, and these two are the compulsory winding up: inability to pay debts and grounds other than inability to pay debts. 5 reasons, right? Those 5 reasons. And as I said, compulsory winding up will be done by the tribunal, NCLT. Fine. But here you have to understand some rules are applicable. Here in inability to pay debts, here Insolvency and Bankruptcy Code 2016 will be applicable. Okay, these rules will be applicable here. And here grounds other than inability to pay debts, here this is still not updated, the IBC is still not updated over here. So that is why here Companies Act 2013 with court rules will be applied over here. Fine. And then in voluntary winding up, the same IBC 2016 section 59 will be applicable over here. Okay, let me write that, section 59. Okay, section 59 will be applicable. Section 59 of what? Section 59 of IBC 2016 will be applicable in voluntary winding up. Fine. So this is what is modes of winding up, different modes of winding up. But don't worry, whatever may be the modes of winding up, don't worry, it's very simple, because the accounting procedure is same. What we have to do in accounting terms, it's same. Don't worry, the method is one only. This is just the theory that might be asked for 2 or 1 mark. Okay, that's why I'm explaining you all this. Fine. And then you have to understand who can file the petition to the tribunal. See here, petition for winding up to tribunal can be made by who can file the petition, who can file the application to the tribunal that a certain company has to be, it should be wound up. See here, there are 5 authorities. The first is the company itself. The company itself can file a petition to the tribunal that the company should be wound up, or the contributory. Now, who are the contributory? Contributory is the any person who is liable to pay in the event of liquidation, okay, such as the shareholders. They can also file a petition. And then registrar, the registrar of companies can also file a petition to the tribunal that the company should be wound up, or any person authorized by central government, and central government or state government itself can also file the petition that certain company should be wound up. Okay, so these are the 5 authorities that can, push the resolution, and they can file the petition or application to the tribunal that the company should be wounded up. Right, so we saw the meaning, modes of winding up. Yeah, 3 different modes of winding up. These 2 are compulsory, this is voluntary, and the compulsory is done by the tribunal. And we also saw the 5 ways, right? 5 ways. The first is the company itself wants it to be liquidated by the tribunal, and then the second is against India, doing anything against India, and then fraud activities, and then failing to file the financial statement with the registrar, and annual returns for 5 consecutive years. And the 5th one is the tribunal is of the opinion that the certain company should be liquidated, it should be wounded up. So that is what these are the 5 circumstances that can happen. And then these are the 5 authorities that can file the petition to the tribunal that the company should be liquidated. Fine. So now we have to understand the process of liquidation. Okay, so let's understand the process of liquidation. Now let's see the liquidation process. See here in this example, let's say this ABC Company Limited has to be liquidated, right? So if it's a voluntary liquidation, then this company has to follow what? It has to follow Insolvency and Bankruptcy Code 2016, right? According to section 55, whatever the regulations and rules are there, it has to follow and voluntarily liquidate itself. That's first option. And then what will happen? The another option is the compulsory liquidation, compulsory winding up. If these situations arises, then there will be compulsory winding up. That is, these 5 authorities may file the petition to the National Company Law Tribunal, right? The company can do that, contributory, the registrar of companies, any person authorized by central government, or the central government or state government itself can also file the petition, right? And if the National Company Law Tribunal feels that there is no other option than to just liquidate the company, then it will give the green signal, and then board of directors of that company will have to prepare the statement of affairs. What is statement of affairs? Statement of affairs is a statement which contains all the details of all its assets and liabilities. Okay, whoever they have to pay, whatever, how much is owed, everything, all the details will be contained over here in statement of affairs. And the format of this statement of affairs is fixed. Okay, it's fixed as per law. Okay, as per Companies Act 2013. Okay, it is fixed. Then what will happen? Then if it's a compulsory liquidation, if it's a compulsory winding up, then since it's done by tribunal, so the tribunal will appoint a liquidator. Okay, who is liquidator? Liquidator is any person who will carry out the liquidation process. Who will carry out the liquidation process? Okay, he will sell off the asset, he will pay the liabilities and all that. But since liquidator is a third party, right? He's a third party. He's not a member or anybody, any inside person of the company. No, he's an outside person. He's a third party. He doesn't know anything about this ABC Company Limited. He doesn't have any freaking idea what is going on with this company, what are its assets, what are its liabilities, how much this company owe to its lenders, nothing. He doesn't know what are the papers of the assets, where are the assets, right? What are the realizable value of the asset. He doesn't have any freaking idea about this company. So now what will happen? How will he get all these information that is required by him to carry out the liquidation, to carry out the process, the duties of liquidator? So to overcome this problem, what will happen? To overcome this problem, this statement of affairs will be given to liquidator, because in this statement all details are there, right? So this will be helpful for liquidators to carry out the liquidation process. And who will prepare this? The inside person, the directors, board of directors will prepare this, right? And they will have the best information. So that is how, okay, the statement of affairs will be prepared by board of directors with their chartered accountants and will be given to liquidator, who will, with the help of statement of affairs, will carry on the liquidation process, and he will start off selling the assets. He will start off selling the assets and realizing the money, okay, realizing the assets and paying the liabilities in particular order mentioned in the Indian Companies Act 2013, okay, in particular order. That is most important. You have to understand this order. I've told you, right, this chapter is based on format. So that is the thing, it is based on law. So you have to understand that simple order. It's very simple, don't worry, okay. In particular order, the liabilities will be paid off. The assets will be realized anyhow, okay. It will be realized, whatever it is. But the liabilities has to paid in particular proper strict order, okay. So then this will happen. He will sell the assets and pay the liabilities, and at last, whatever he did, he will have to prepare a separate account that is called liquidator statement of account. It's simple cash book, okay, receipts and payments account. It's very simple cash book. We'll see the format of this in the next video. Don't worry, it's very simple, okay. So now this is what, and the question in exams might come on these three. See here, statement of affairs, okay, you have to prepare a statement of affairs or liquidator statement of account or B list contributory. Here you might also get a question of a deficiency account also, right? So but the most important thing is liquidator statement of account, and for the BCom, BBA students and the BAF students, all you guys, you will only get liquidator statement of account, okay. This statement of affairs and B list contributory and deficiency account, it is not in your syllabus. Only liquidator statement of account is in your syllabus, okay. So don't worry, it's very simple. So in the coming video, in the next video, we are going to focus on liquidator statement of account, okay. We'll start off the chapter here, and then in the third video we'll see the problem, and then we will continue this chapter. Fine, you understood, right? It's very simple. Fine, okay then. So now see you in the next video. All right, okay.